Venezuela's economic collapse is a stark reminder of how mismanagement and misguided policies can lead to disastrous outcomes. This once prosperous nation, rich in oil reserves, has seen its living standards plummet by a staggering 74% between 2013 and 2023, the fifth largest decline in modern history outside of war or revolution. So, how did this happen? To understand Venezuela's descent, we must look at the period before the collapse, from 1999 to 2013, under Presidents Hugo Chavez and Nicolás Maduro. During this time, the country experienced an economic boom fueled by a global commodity supercycle. But rather than seizing the opportunity to secure their future, the Venezuelan government adopted deeply flawed macroeconomic policies. Rather than saving for a rainy day, the government engaged in excessive spending, running double-digit deficits even during prosperous times. This reckless approach led to a massive increase in external debt, over $100 billion, mostly tied to the state-owned oil company, Petróleos de Venezuela, S.A. acronym is PDVSA. Instead of fiscal prudence, the government relied on the central bank to print money, leading to rampant inflation that disproportionately affected the poorest citizens. Gasoline in Venezuela was heavily subsidized, so much so that it was often virtually free. This led to smuggling on a massive scale, with over 100,000 barrels of petrol being trafficked to neighboring countries daily, depriving the government of critical revenue. Simultaneously, the oil industry suffered due to lack of investment and mismanagement, falling from around 3 million barrels per day at the turn of the century to just 2.3 million barrels per day before the crisis began. On the microeconomic front, the Chavez and Maduro administrations enacted heavy-handed controls over the economy, hostile to private markets and property. The result? The government expropriated thousands of businesses, crushing investor confidence and leading to closures and diminished output. This aggressive interventionism did not promote prosperity. Rather, it crippled the non-oil economy and made the nation heavily reliant on imports, even for basic goods like rice. In 2014, the situation reached a tipping point. The oil prices dropped from $100 to $40 per barrel, exposing the vulnerabilities created by years of mismanagement. With no meaningful savings to cushion the blow and a crippling debt load, the government was forced to cut foreign exchange allocations for imports. As a result, the country faced dire shortages. Instead of adapting, Maduro doubled down on the failed policies, continuing price controls and money printing, which spiraled the nation into hyperinflation. By November 2017, inflation skyrocketed to a staggering 50% per month, driving countless businesses to the brink of collapse and forcing millions of Venezuelans to flee the country. Estimates suggest that over 7.7 people have left since the start of the crisis, seeking refuge in neighboring countries and beyond. In 2019, the situation worsened with the imposition of international sanctions aimed at ousting Maduro. These sanctions cut Venezuela off from the global oil market and led to a further plummet in oil production. Already devastated by years of underinvestment, The country, once a titan of oil production, saw its output fall to an abysmal low of 337,000 barrels per day. The political landscape in Venezuela played a crucial role in this economic tragedy. Chavez and Maduro systematically dismantled checks and balances within the government, hollowing out democratic institutions. With no judiciary or legislator to curb the excesses of power, disastrous policies proliferated unchecked. The self-destructive economic framework remains intact, leaving little hope for meaningful recovery in the foreseeable future. As we reflect on Venezuela's tragic journey from riches to rags, we see a cautionary tale about the consequences of poor governance, corruption, and the importance of sound economic policies. The question remains, can this once vibrant economy find its way back to stability, or is it the road to recovery too far gone?